We have a lot of news to get into today for all of you. CPI, Iranian conflict, oil news, some big oil news that you need to know, some earnings coming out today and after hours, economic data tomorrow and Friday that are going to be critical. I don't want to waste your time. Let's begin. The Russell 2000 today is down about 1%. The Nasdaq breaking into green territory, up 0.01%. S&P 500 is down 0.22%, and the Dow is down 0.77%. The VIX is up about 1% today. And if we take a look at the sector leadership in the markets today, this is something I think a lot of people are getting really confused about right now. If you're looking at the S&P, it's not telling you a whole lot on any given day. The S&P really has not moved much in months, but under the surface, technology and software and risk on assets have gotten smoked, and other areas of the markets have done well. So on any given day, you could have one area of the markets getting destroyed and another area skyrocketing. And what's happening on a sector by sector basis can tell you a lot about the health of the broader markets and potentially what's coming next. Because who's moving this leadership every day? It's not retail investors, it's big money. If you take a look at the number one performer in the S&P today, it's energy. That's not a big surprise. Despite some good news today in the oil markets, energy is up 5%. Now, as I've explained before, I do think we have hit a high on oil. Oil went up to almost $120 per barrel, $119.48 per barrel just in the last 3 days or so. Came all the way back down to $83 a barrel, literally in a 12-hour timeline, and now it's back up to $87 a barrel. I don't see it going back up to $120 a barrel again. I see this conflict likely to de-escalate before it escalates again. Even then, I don't think Iran has the capability to really disrupt things even further from here. And then what's more important than spot oil prices today, again at $87.53 per barrel, is the implied oil prices by December of 2026. Because as I've said before, this is not really a problem if oil goes up for a month or two. This becomes an issue if oil goes up for 3, 6, 9, 12 months. That's where the real drag and burden on the economy is going to come from. Now, if you look at the December 2026 WTI crude contract price, it's implying oil at about $70 a barrel by December, which is high. Like, that is elevated, and there's definitely some risk premium baked into that. I would think by then oil would be less than $70 a barrel. That has been creeping higher. Last week it was about $65 a barrel, so that's not great. But I do think there's just some risk premium baked into that. And oil is actually going to be far lower than that by December. Now, despite oil being up 5% today, we do have some good news and some bad news in energy markets. The IEA agrees to release a record 400 million barrels of oil to address Iran war supply disruption. The International Energy Agency's 32 member countries agreed to release 400 million barrels of oil to address the Iran war supply disruption. This is the largest release of energy stockpiles in the history of the IEA. But we do have some bad news here. 3 cargo ships were struck off Iran's coast, the UK says, including one in the Strait of Hormuz. Now, as I have said before, oil tankers, they're not flowing through the Strait of Hormuz because of insurance, okay? If a tanker is carrying, some of these tankers can carry 2 million barrels of oil or more, times current spot price of $87 a barrel. That alone is $174 million worth of oil, let alone what the ship's cost is. You're talking probably a couple $100 million on top of that. Some of these tankers can be $1 billion to $3 billion worth of oil plus the ship actual value. it's way too much of a liability to send those ships through the Strait of Hormuz without insurance. Insurance companies don't want to insure them because the risk is too high. The premiums would literally be unaffordable to insure these ships and make a profit on transporting oil, so they're not moving. Well, the United States government has set up a $20 billion fund to help facilitate insurance on these tankers. Insurance does not work fast. It's not like one day you don't have insurance, the next day you have insurance. That's not how it works with when you're underwriting this kind of risk with this many dollars at hand. But I do think inevitably in the days and weeks to come, there will be more oil flowing through the strait, and that will bring down oil prices. But getting back to the sectoral leadership in the S&P today, look at that. Technology is the second best performer today, up 0.2%. Communication services, basically like technology, down 0.3%, the third best performer in the S&P today. Consumer cyclicals, down 0.51% today, the fourth best performer in the S&P today. As I've said before, guys, consumer cyclicals, communication services, and technology, those are the areas I'm bullish on right now. They are the trades that have been decimated in the last 3 to 6 months heading into this war. But what's happening now is investors, big money specifically, they're selling the war trade. They're selling the recession trade. They're selling the utilities, consumer defensives, basic materials, healthcare, industrials, and they're buying technology. They're buying communication services. They're buying consumer cyclicals. Now, not every day is going to be green for these three subsectors of the S&P: technology, communication services, and consumer cyclicals. But you are seeing this outperformance, in which we're going to look at that in just a moment. But again, here on the day today, industrials down 0.5%, healthcare is down 0.6%, utilities down 0.7%, consumer defensives, the recession trade, down 1%. Real estate down 1.1%. Financials, I think they have their own issues going on with private credit, but down 1.4%. Basic materials down 1.9%. In the past week, energy's obviously up 1.5%, but considering the rise in oil prices, I'm not impressed with that at all. The reason for that is you already priced in this Iranian conflict and the oil problems before the conflict happened. Big money already knew the conflict was going to happen. So energy was number one in the past week, best performing area in the S&P. Technology is number two. Communication services is number three. And consumer cyclicals are the fourth best performer in the S&P. What's underperforming? Utilities, consumer defensives, healthcare, real estate, financials, industrials, and basic materials. In the past 3 months, what has outperformed? Energy, clearly. Basic materials, industrials, consumer defensives, utilities, and real estate. The exact areas of the S&P that have outperformed for the last 3 months have now underperformed in the past week. Okay? They've really underperformed for the past month now. Financials, basic materials, consumer defensives, industrials, and healthcare are some of the losers here. Technology has outperformed all of those industry groups. Communication services has outperformed all of those industry groups. Why is this important? Well, again, on any given day, you're going to see some areas outperform, some areas not outperforming. But when you see the recession trade and the war trade get so bid up and so crowded, everyone gets bearish and fearful. And then for a week or two, maybe 2.5, 3 weeks, you start to see technology and consumer cyclicals and communication services outperforming. Even if it's not a stellar performance, they're outperforming. That is telling you the markets are getting stronger. The markets are getting healthier. And that's something you should pay attention to. The only caveat to this is financials. In the last month, financials are down 9%. By far the biggest loser on the S&P. The second biggest loser is down 4.5%. So financials are, they fell 2 times more than the second worst performing industry group in the S&P. I think it's a lot of private credit issues. I think the selling in financials is getting close to an end. but that could be highlighting a problem in private credit, a problem in lending markets. We already know there's a problem, so we'll see if anything comes about with that. But if there was anything to be bearish on, it's not the conflict with Iran, it's not oil prices, it's not the AI trade, it's maybe what's happening with the banks right now. Now, here today, we did have CPI that came out. The core CPI rose 0.22% in February, in line with expectations. That lowered the 12-month rate to 2.46%. Core inflation was 2.3% annualized over the previous 6 months. Both are the lowest readings in 5 years. So excluding this Iranian conflict, in which we expect is going to drive up core and headline inflation over the next couple of months, the February inflation numbers are definitely on the right path here. Okay. Now, you can see 3% annualized over the last 3 months is the highest reading since September, though. Now, headline CPI rose 0.27% in February, also in line with expectations, and it's sitting at 2.41% over the last 12 months versus 2.39% in January. Again, this really has to do with energy prices. Core non-housing services rose 0.35% in February, which is the highest or the third highest print in the last 12 months. January's 0.59% is the highest. So, January was not a good number for core non-housing services inflation, but you fell like almost 50% month on month here. So I would say that's progress, even though it's still a high number. It says core goods has resumed progress towards its pre-pandemic equilibrium, and shelter is now undershooting its pre-pandemic equilibrium. And I would just prepare for this Iranian conflict to end at a moment's notice. Donald Trump said today, quote, "Anytime I want it to end, it will end." Typically, when Donald Trump starts to say things like that, you're getting pretty damn close to an end. Now, let's put our thinking caps on here. What do you think is going to happen when the conflict ends? Well, I think Wall Street is screaming it at you right now, and most people are not listening. What areas of the markets are going to do well when this conflict ends? Well, it's the areas that have outperformed in the past week. It's technology, communication services, consumer cyclicals. The outperformers in the S&P of the subsector groups in the past week, excluding energy, which would be the biggest loser if the conflict ended. Now, tomorrow, for Thursday, we are going to have building permits for January, housing starts for January, the goods trade balance for January, which is one of the first inputs to Q1 2026 GDP that we're going to get. So that could be a little more important. Initial jobless claims as well will be coming out tomorrow for last week. Friday is really your big day, though, with core PCE price index month over month, durable goods orders month over month, GDP growth rate quarter over quarter, second estimate for Q4, personal income month over month, personal spending month over month, as well as JOLTS job openings and Michigan consumer sentiment. Now, we are also coming off of Oracle earnings, in which Oracle stock was up around 10% today. This did have a big impact on some of the data center companies as well. Generally, the AI trade did pretty well today. Some areas not as much, like software was a little bit more of a mixed bag. Semiconductors did pretty well. You can see Oracle here up about 9.5% at the time of recording today's episode. So yeah, there was a general kind of, positive attitude towards technology and, risk on. Not uniformly just a great day across the board, but there's definitely more red in these, other areas like consumer defensives, industrials, real estate, utilities versus technology. But we do have more earnings today and after hours that are going to be specifically important for the software trade. Really, over the next 24 hours, there's going to be a lot of earnings for software. First and foremost, UiPath, Netscope, Stitch Fix, and Bumble. Thursday morning, tomorrow morning, Dick's Sporting Goods, Lee Auto, Dollar General. And then Thursday and after hours, Adobe, Rubrik, Sentinel One. You guys give me shit because I don't know exactly how to pronounce that one. Who cares? Centennial one. Centennial one. Sentinel one. Who cares? Nectar, Ulta Beauty, Veritone, and some others. Now look at the CNN Fear and Greed Index today. The Fear and Greed Index is sitting at 27. You're almost in extreme fear right now for the CNN Fear and Greed Index, which is kind of wild. Market momentum, extreme fear. Stock price strength is fear. Stock price breadth is neutral. Put and call options, extreme fear. Market volatility is fear. Safe haven demand, extreme fear. And junk bond demand in extreme fear as well. If you take a look at the percent of stocks trading above their 50-day moving average, this is just not a great number we're sitting at right now, especially on a day like today. You see 34.5% of stocks trading above their 50-day moving average. This is, pretty in line with correction type of, levels for the S&P. So I think you're starting to see a little bit more of a reflection of the damage under the surface in markets on a day like today. The percent of stocks dropping below their 50-day moving average today alone, down 9.12%. So, yeah, definitely not a great day for somebody that's been playing the war trade, someone that's been in defensives and in these large areas of the markets that have, done well this recession trade. Definitely not a great day for you. Now, Donald Trump says today the reopening of the Strait of Hormuz is going well. Donald Trump said today on Spain they have been bad, that it may cut off trade with Spain. Trump on hitting Iran says we're not finished yet, but again, it sounds like you're getting pretty damn close. Donald Trump says he is not worried about any Iran-backed attacks on U.S. soil. And Donald Trump says, quote, I just spoke with the leaders of various countries, which again, just reading the tea leaves here with everything that we've talked about in this video, it sounds like you're getting closer to the end at this point. And Donald Trump says, I think oil companies should use the Strait of Hormuz. JMIC says that there are no confirmed evidence of mines in the Strait of Hormuz. Trump was asked if Iran laid mines in Hormuz, and he said, we don't think so. Trump on Iran says the U.S. could strike even more targets if we want. Again, that's kind of, playing poker, I guess, is a way to say it. Like, look, we could hit more targets if we want to. The next headline that we could possibly get is, we could hit more targets if we want to, but we think we're done, right? Something along those lines. It paves the way for the conflict to end. And look, for all the bears out there, I will be the first to admit that the S&P chart does not look great. But I think if you're a bear right now, you really need to acknowledge that this is not an even market. This is not a market that is, most sectors are following each other. This is very much a market for months now that there's been a lot of pain under the surface in some areas. There's been a lot of strength under the surface of this market for some areas. And the S&P is just not a very accurate barometer of what's happening in the markets right now. So yes, while the chart looks bearish, what you're actually seeing, again, within the sectoral leadership of the markets is very much a tilt towards risk-on technology, consumer cyclicals, communication services that have begun to outperform. I think that's a much stronger indicator of future performance versus just looking at the charts and seeing what it tells you. Now, you can make the argument, again, we got this, extension to the downside. You hit that low of about $662. You bounced up aggressively within a day back to the, 675 level. That's a pretty good sign that that was a bottom. But could you come back down? Could you come back down and test that 200-day moving average again at about $655 per share? Of course. Now, if you're an indexer at this point, I would not be buying the S&P. It doesn't make a whole lot of sense to buy the S&P. But if you are somebody that buys single stocks, there's a lot of opportunities out there in this market. So let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel. If you guys want to come trade and invest alongside us in our high conviction investments, check that link out down below in the description of today's episode. Have a great rest of your day, and I will see you in the next one.